The current opportunity in government bonds post the medium-term budget it's got more attractive in our opinion, where your 20-year bond now is roughly around 10.3% and your 10-year bond is at 9.4%. So in the context of the history of South Africa, that is at almost all-time highs. And we think as a starting point, that's quite attractive when average inflation over the next few years is expected to be around 5 to 5.5. So we're talking about 3 to 4% real yields, which is really attractive in our opinion. Historically, when you've started at these high levels in your government bonds, you've earned equity-like returns, and we think the prospect for that is an opportunity going forward from here. Another opportunity that we found in the government bond market is in your inflation-linked bond market, where we're seeing real yields of close to 3%. So these bonds will adjust with inflation over time, so you're fully protected against an inflationary shock. And at the same time, we're now earning close to 3% real yields, which we think is really attractive. And this is in your short end of your inflation link curve, in your 5-year space, in your 10-year space. One of the key risks to our bond investment thesis is that inflation becomes unhinged. So in the sense that in Turkey, we've recently seen inflation rise well above what they target as a central bank, and this has big implications on your bond yields. We think in South Africa, the SARB's credibility remains quite important, and you've seen with the budget and the statement by Treasury that they intend on further backing the SARB. We think that's quite important for our bond call going forward. Recently, Moody's had announced that they would delay the rating decision post the medium-term budget policy statement. So given the budget was slightly worse than what was expected by the market, and they had emphasized that they required debt levels to stabilize, it seems the market is pricing a bit of a high expectation that they may go forward and then downgrade the outlook on South Africa. However, we feel a lot of this may potentially be in the price as bond deals have sold off in post the medium-term budget. Despite government bond deals being quite attractive, we still feel that in our portfolios we haven't taken excessive duration risk, and with the addition of inflation-linked bonds, our portfolios remain quite well diversified. And then part of our process is always to ensure we have sufficient cash should the opportunity become more attractive.